Welcome back, dear traders. You are watching a recap of the American session. Our analysts have already studied the main trends on Wall Street today. The US stock market tried really hard to halt its losing streak last week, but it slid eventually into the negative territory due to volatile trading sessions. However, risk appetite has returned to the equity market today. It means that investors are likely to resume purchases, struggling of fears. Let's discuss what actually happened on Wall Street. As I have already mentioned, the main stock indexes ended last week on a pessimistic note. There were plenty of negative fundamental factors for stocks. Nonfarm Payrolls data turned out to be upbeat, which may signal further aggressive tightening. Besides, Elon Musk's very bad feeling about the economy pushed Tesla shares significantly lower, dragging other tech stocks down as well. By the close of the session, the Dow lost 1% and the NASDAQ sank by 2.5%. The S&P declined by 1.6%. And today the risk on sentiment has strengthened once again. The indexes were rising steadily by 0.8 and 1.59% during the pre-market trading. The growth fuels hopes for an upward reversal, so the S&P 500 is likely to be fluctuating in the range of 4,110 and 4,230 at the start of the week. Investors seem to be tired of a series of losing streaks and disappointing reports. The new week may bring optimism to the market, which main stock index is finally rising higher. The economic calendar is almost empty. It includes macro stats mainly for the eurozone. On Thursday's meeting, ECB President Christine Lagarde is expected to confirm the end of the asset purchases this month and the first rate hike in July. However, the regulator has not made any decision yet on whether it will raise the cash rate by 25 or 50 basis points. Investors are anticipating data on the US CPI Index, which is due on Friday. They are particularly interested in this report after inflation in the European Union reached a new all-time high last week. The region is projected to grow sharply by 0.7% in May, although the annual inflation is likely to total 8.3%. Stock market traders have time to recoup losses till Friday. The strong Nonfarm Payrolls report revealed on Friday indicated that the Fed has no reason to take a pause in its tightening cycle. The labor market continues to recover. The economy is adding jobs about twice as fast as before the pandemic. More Americans are now able to find a job. Companies are actively hiring employees amid steady economic growth. Wages are rising, but not so fast as to cause inflation. This is why analysts are confident the Fed will be able to engineer softer lending and to debunk recession fears. Apart from that, China eased coronavirus restrictions, which also boosted optimism in the stock markets. Chinese stock indexes climbed by 1.87% to 2.56% overnight. Shares of tech companies scored the biggest gains. Although Bank of America predicts a long-lasting bear market, it highlights good buying opportunities for this week. The S&P 500 is projected to jump to 4,400 points. And next week, the Fed will announce its key rate decision. It means that this week investors may take advantage of a lull and make a profit on rising stock indexes. The US dollar index returned again to 102 points. Despite its upward rebound, a further rise looks extremely unlikely. It may be fluctuating today in the range of 101.30 and 102.50 points. The US dollar index went up above the 102 points mark on a Monday, holding on to gains from last week after better than expected US jobs report bolstered the Federal Reserve's aggressive stance on inflation. The May report instilled hope that the US may escape a recession. The economy has now recovered more than 96% of the jobs it lost during the pandemic and may fully recover already in July. It took nearly 3 times as long for the US to achieve the same rebound after the 2008 financial crisis. The Fed has raised interest rates by an aggregate of 75 basis points this year and is expected to increase rates by another 50 basis points in June and July. Investors now await the release of May's CPI on Friday to see whether US inflation has perked. Amid optimistic results of the lack of fundamentals and the focus on the ECB's meeting, the dollar index is likely to stay firm. As for the USD CAD pair is still in a bearish trend. The quote is expected to trade in the range between 1.2480 and 1.2580 intraday. The loonie has strengthened after the recent rate hike and the Bank of Canada's hawkish statements. The currency is surging in spite of the stronger greenback. Additional support for the loonie comes from the volatile oil market. Growing global shortages concerns are causing turbulence in the market. Today, oil quotes soared after Saudi Arabia raised crude prices for Asia by more than expected. The key Arab light crude grade for Asia rose by $2.10 per barrel to 6.50. In this light, Brent grew to $120 per barrel and WTI climbed to $119 per barrel. Amid increased risk appetite, Bitcoin has swelled to $31,390 and has strong bullish potential. The asset may consolidate and finally break through $32,200. Today, digital gold may at least settle above $31,500. Alternatively, the asset may get back to the $30,200 mark or get stuck in a sideways range until there are more serious driving factors. Our Monday outlook is coming to an end. The trading day on Wall Street promises to be sunny and hopefully successful. Stay tuned and we will keep you up to date with the latest market events. We wish you profitable trading. See you tomorrow.